Hello, welcome. I'm Nataraj Upadhyay. This is the top 50 mutual funds analysis for the week ending May 24th. So let me load the PowerPoint. So as anticipated, if you look at the mutual fund summaries at the end of the week, as anticipated, almost all type of mutual funds had a bullish run last week, including the commodities, because commodities started the week with a bullish run, then they corrected significantly. But overall, there has been a bullish run for commodities also, and hybrid funds as well as equity. So top 50 average based on 1 month return had an improvement by 3.25%. For the month, it is 11.25%. And these top 50 funds for the annual are showing 50.94%. And when you compare it for top 50 1-year leaders, it is 83.23%. So why there is a difference? Because top 50 funds for the last 1 month are filled with some of the commodity funds who anyway do not give 1-year return more than say 20 to 25%. So that is the difference. Otherwise, it is all bullish run. So the news is that certain commodity funds did come into 1 month leadership. So that is indicating the good run we had on commodities. However, the caution is that commodities bull run may be almost over. See, commodities perk up only if there is an inflation news or there is a war flare-up news. We don't know whether such news will come ahead, but comparing the risk and reward, there may be a more risk than reward in betting on commodities going forward. So that uncertainty is something you need to consider in further investments in commodity funds. Okay, so that is the story here. Let us look at the top 50 funds for the last 1 month at the end of last week. What we do here is, after listing the top 50, we look at the average returns of this top 50. And for example, this top 50 funds for the 1 month gave 50.94% for the last 1 year. So that means any return above 50.94 is marked in bold. Similarly, for 6 months, 3 months, and 1 month, they're all marked in bold. And whichever fund that has above average performance for all timelines from 1 month to 1 year are the consistent performers. So you do not want to get stuck with the flash in the pan kind of performers, and then such an investment can become an underperformer. Therefore, this caution. So by doing this technique, we are ensuring that our pick for further investment is a consistent performer. This stringent consideration may cause you to let go some of the good funds here, but their turn also will come, because you don't have infinite money to invest. So in a month, at least you get 4 times to make investment decisions, because this report is coming to you on a weekly basis. So this week, the ones that are in the green are HDFC Defense Fund, Canara Robeco Infrastructure Fund, LIC Mutual Fund Infrastructure Fund, HSBC Infrastructure Fund, Invesco India Infrastructure Fund, okay, and DSP Tiger Fund. Now, Tata Silver ETF has data for 1 month and 3 months. It doesn't have data for 6 months and 1 year, because it's a reasonably new fund. So by the criteria, I should mark it green, but I am not marking it green, because we know that being a commodity fund, it will not come as an annual performance leader. So I don't want you to be misled. So if you are an investor in commodity funds, Tata Silver ETF is a good fund. So that's why I have shown it in yellow. Okay, so this is the top 50 leaders on a 1 month basis. When I look at top 50 leaders on a 1 year basis, it is filled with all equity funds only. And if you look at the leaders who made the investment cut are CPSE ETF. So if you notice, CPSE ETFs this time had a good monthly return also, showing 120.77% for the entire year is very impressive. Similarly, SBI PSU fund with 110.16% return for the year back. UNESCO India PSU equity fund again above 100, 109.96. Then the other funds which made the investment cut are Bandhan Infrastructure Fund, DSP Tiger Fund, UNESCO India Infrastructure Fund, Nippon India Power and Infra Fund, LIC Mutual Fund Infrastructure Fund. So the message is very clear. So the whether it is power or infrastructure related or PSU related, only such funds are coming as investment worthy at the current market conditions. So you can definitely consider continuing the investment here. There is a election result coming by June 5th or 6th. So that could be a potential correction if there is any disappointment against the projected results. However, that is one more week. So we could expect this kind of a run even for another week before the election results. So it is very unlikely that these infrastructure, PSU, and power related themes will slow down in the near future. Bottom 50 funds uh, is more to look at what kind of funds are not doing well. This is not an implication for investments. Good news is that technology or IT based funds are disappearing. There are some commodity funds and there are some specific foreign equity theme based funds, and then there are some debt funds. Whether you look it for 1 month or 1 year basis, uh, you can see that these are some specific funds which are not investment worthy because of underperformance. But good news is that the IT or technology based funds are getting out of the doghouse. That doesn't mean that they're ready for investment, but their worst days are over. So top 50 equity funds based on 1 month return are these. And here, because the top 50 across all fund types had some commodity funds, here we are looking at only equity funds. So this list is slightly different from the all fund types top 50 for the last 1 month. Here it is HDFC Defense Fund, UNESCO India PSC Equity Fund, Canara Robeco Infrastructure Fund, LIC MF Infrastructure Fund, HSBC Infrastructure Fund, UNESCO India Infrastructure Fund, DSP Tiger Fund, and CPSE ETF. These are shown as investment worthy. When I look at top 50 based on 1 year return, this is just a redundant because across all fund types, the same list will appear because top 50 leaders across 1 year return is always represented by the equity funds. So we are moving to commodity funds. Commodity funds also had a bull run. You can see last week. The leadership is which is marked here in green for investment worthiness are the JM aggressive hybrid fund, HSBC aggressive hybrid fund, Aditya Birla Sun Life multi index fund of fund, HDFC balanced advantage fund, Shriram aggressive hybrid fund, UNESCO India aggressive hybrid fund, ICICI Prudential retirement fund hybrid aggressive plan, SBI Magnum Children Benefit Fund Investment Plan, and Nippon India Multi-Asset Fund. Now, hybrid funds are for those who do not want to trust on equities because the equities will do very well on the bull run, but if there is a correction in the market, you may have a negative return for being a late entrant. So such people can consider hybrid funds because they give a much lesser return on bullish run, and hopefully they will do correct lesser than equity funds during the correction. However, my observation in the last 2 months is during the corrections, hybrid funds did not do better than equity funds. So the best hybrid fund, JM Aggressive Hybrid Fund, gave 60.19% return for last 1 year, which is very impressive. Whereas the equity fund top funds gave a return of above 100%. So that is just for the distinction. So if you look at top hybrid funds, you can expect more than 30% annual return. Looking at the top 50 hybrid funds based on 1 year return, the list is JM Aggressive Hybrid Fund, ICICI Prudential Retirement Fund, ICICI Prudential Child Care Fund, HDFC Balanced Advantage Fund, SBI Magnum Children's Benefit Fund, which is investment plan, Shriram Aggressive Hybrid Fund, Invesco India Aggressive Hybrid Fund, Aditya Birla Sun Life Multi-Index Fund of Fund. Okay, the top one, Quant Dynamic Asset Allocation Fund, did not become investment worthy because it did not have consistent performance across all the timelines. So now we are coming into commodities. So if you look at commodities, there are two types of funds within the top 50. Anyway, there are only totally 51 funds in commodities. These funds are typically silver funds or gold funds. If you look at the one in the bottom, are mostly gold funds and they didn't do well last week. And all silver funds had a positive return. So there are many choices here for you among the commodity funds. Most of them are silver funds. HDFC Silver ETF gave an annual return of 28.25 and monthly return of 14.71. That kind of a run was there, and the entire month went through some bullish runs and corrections, but net there was an appreciation in the returns. However, I would like to caution you that this kind of a bull run may not happen unless inflation concerns will flare up, especially in the US, and war issues will further become worse. So that is a bet you have to take. So I would say risk and rewards are equally poised. Typically, investment should happen when reward promises are more than risk, at least by 2 times. So my caution is, though commodity funds have done well, you may slow down on further investments. So I have done commodities top 50 based on 1 year return also. Same HDFC Silver ETF is on the top here, and you have most of these are silver ETF only. So that if you look at the average, commodity funds have given 20.77% for the whole year among top 50. So even the gold funds which corrected last week, you can see they are on average 17 to 18% annual return. So commodity funds, it's a watch and go. If you're already invested, you can stay put, because when commodity funds are giving you above 20% return annually, it's way above the expectation. So that's a good news. So that is the end of mutual fund top 50 performers analysis for the last week. See you again next week. You can see more details on my blog, Nats Fund Corner. All my updates will come in more various social network platforms. Thank you so much for listening to this. See you next week again.